All right, everybody. How are you? Hi. Hi, 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 hi.
So we're 10 minutes away now to the top of the hour as we wait for the key central bank rate decision for today as eyes are on the Bank of England. So in the wake of yesterday's robust UK inflation data, expectations now solidly for a 25 base point bank rate increase to 4.25%, with more than 95% priced in by the market now. As far as those clues for the path of future increases go, the vote may be suggestive, as should be the policy statement. At the February 2nd Bank of England meeting, 7 members voted for the 50 base point hike, which did come to pass, and 2 voted to keep rates unchanged. So prior to yesterday's
All
inflation
right,
data, there
everybody.
had
How
been
are
some
you?
speculation of a
Charles.
vote for cutting rates today from
ABOB.
Tinrero, while these aspirations can presumably be
I
put to
miss you
pass.
too, man. I miss you too. All right, so right now I have a couple of trades running. I have some pound shorts with by going long on the euro pound, and I have silver shorts, very much in profits for about 90 pips. So, what do you guys think is going to happen today with the Bank of England? Awesome, UK oil. Yeah, I mean, yesterday's UK oil, yesterday's Brent was an F1 strategy setup made. I mean, today I took this, I'm gonna tell you this. Today I took this euro pound, uh, euro euro pound long, right, on a very bad F1 strategy setup, right? So the reason that it wasn't a good trade, it wasn't a good setup, was because we really didn't have a real divergence, right? Everything on the F1 strategy focuses on this. This gives us a gauge on how momentum is going to be in the market that we're trading. So I lost 0.25% on this particular setup, but then I got long on the dip 3 times, and I recovered those losses. Right? ¿Cómo estás, Carlo? Gold Rich 1974 is your last setup valid? Nope. Nope. I'm short metals right now, but I'm short silver. Right, so right now, this is my trade on silver. And yeah, my stop losses are break even, right? Trade is running around 90 pips. I'm waiting for the break of this lows in silver, right, to take some profits. The reason that I haven't taken any profits in silver is because I, right now, the trade is not running at 1R. So the way that I take profits is this, right? Whenever my trade runs at 1.5, 1.75, 2R, I take 1R off and I move my stop losses to break even. Right now, the trade is still not running at 1R. So let's have a look at the pound because this is what we're looking for, right? So I was looking at possible longs on the pound, right? But I am not going to do that. Let's have a look at the live squawk. So it's expected that the Bank of England is going to increase interest rates by 0.5% or 50 basis points. Greetings, sir. Anything thoughts on pound yen? No. Hope share these positions on VIP channel? No. Listen, mate. Listen, mate. I'm gonna tell you something. I'm gonna tell you something. Um, I am never going to share all my F1 strategy trades on the VIP channel. That's another thing, right? And sometimes I'm going to scale in on a loss, right? Or I'm going to trade back on a loss. And that's my personal trading. That's what I do. That's my job. But I'm not going to. I mean, I'm not going to send it to the VAB channel, right? But this silver short, of course, I sent it to my VIP channel. Shit, I got stopped out on my euro yen euro GBP longs. So let's put on the squawk. And let's wait for this. Mhm. So, if uh, if the Bank of England, hikes interest rates, that's going to be bearish for the pound, which is going to be bullish here for the Euro GBP, which is
3 minutes go now to the top of the hour, again waiting for the
one
Bank of
looking
England rate
great.
decision
So
here, with consensus saying a
let's
hike of 25
calculate
base points to 4.25%.
a
A final note from TDS that yesterday's CPI print has
buy
cemented market views
on
for
a
the Bank of England to hike rates by
0.15%
25 base
risk.
points, with terminal expectations now hovering around 4.46%. They note at this stage it's more likely that the Bank of England maintains its optionality for some further rate hikes, which could disappoint markets. However, as seen in the case of the ECB and the Fed, TDS expect the MPC to stress the work already being done in the terms of tighter credit conditions.
All right. So um, 0.62, right? 25. I'm not going to front run this. 1 minute. 1 minute. I'm looking to buy the euro pound because it is expected that the Bank of England is going to hike rates, which is bearish for the
1 minute
pound,
to go now. 1 minute.
right? So if we get that, very possibly we're going to get a sweep of the lows, and very possibly this is where I want to go long. So 8825, yeah. Heads up. 30 seconds.
10 seconds.
Big spread. Big spread.
25 base point hike from the Bank of England, a vote of 7 to 2 with Tenrero and
Big
Dingra
spread.
keeping rates on hold. Debate that's the Bank of England raising its rates by 25 base points as the FBC assessment is the UK banking system is resilient. Signs of inflation persistent would require more hikes. So again, debate a vote of 7 to 2 there of a raise, noting that Tenrero and Dingra did vote to keep rates on hold. So forecasters saying second quarter GDP to increase slightly, as well as CPI in the second quarter likely to be lower than forecast in February due to a lower energy price cap. Well, CPI remains likely to fall sharply over the remainder of the year despite upward surprise in February. Looking to wage growth is likely to fall back somewhat faster than forecast in February due to lower inflation expectations, as they expect the second quarter employment of 0.2% growth.
0.30% on this long on the pound yen, which is a short on the pound. I'm going to add. I'm going to add to this position lower. Super widespread. I mean, my buy got triggered with a ton of slippage. But well, what can you do? Silver kind of reacting to it.
Just beware there were comments from ECB's not coming through there as well. The ECB unlikely to be done with rate hikes as they still think they need a rate hike in May, but size is uncertain. Core inflation shows no sign of abating as wages and services are its main drivers.
There you go. I really wanted to get long around the 88, 88.25 or so. But you know what? Um, boom. Let's have a look at.
It's an update now from pricing as traders are adding to Bank of England rate hike bets, pricing in a
There you go. This is the
4.62%
thing,
peak.
right? The pound USD, right? Sweeping the highs. Hold on. I need to protect my trade here. Because of how much slippage my position got into, I really need to be careful with, a sweep of the lows. So, if price comes down to my entry, I'm gonna close at break even. Come on. There you go. Yeah, looking good. Pound shorts looking very, very good. I'm gonna move myself to break even now. Um, and yeah, this is looking phenomenal. This trade on the Bank of England rate decision is looking phenomenal. Silver also looking great. Mm, I think I'm gonna take profits here in silver. I don't know, maybe. I really wanted to get, I really wanted to get long way lower at around the 88.23 level or so. But slippage was so wide. You guys saw that, right? You guys saw the how widespread got there. I could in fact, yeah, I could, take some profits in silver. Um, 94 pips. More, what going to be your target, please? On what? I got long on the euro yen. My stop losses are break even, right? I'm waiting for a possible break of these highs. If price from, I didn't get the best entry because of slippage. That's the thing, right? I didn't get the best entry because of slippage. Because I bought at market. That's why my stop losses are break even at the moment. I wanted to get in on this move down. So shit, the slippage that I got was around 8 pips. I'm gonna keep this. Maybe this wasn't the best market to trade this. I'm gonna close silver here, 95 pips. Yeah, I'm gonna close silver here for a 1 hour win. Mm, yeah, closing silver. So I'm going to closing my silver shorts here for 90 pips, 1 hour. Yeah, maybe it's going. Yeah, no, of course it's going to run down. But let's focus on this euro yen. Yeah, euro pound long. Let's have a look at what the pound is actually doing. This is the thing, right? Let's have a look at the pound USD, right? So we had that fakey. So I mean, let's have a look at the euro pound. We had that fakey below the London lows, and I got long here. I mean, I um, clicked I clicked the buy button here, but because of how wide spreads were, I got a big slippage. So my entry is around here. That's why I move my stop losses to break even on that particular trade. Yeah, of course, silver is going to. Of course, silver is going to go down after I closed it, right? But yeah, the reason that I closed my silver shorts here is because of this thick zone. So, and silver has a very, very wide spread too. and see what happens here. Could we? Could no. I mean, shorts and the pound are looking very good. I mean, if I were a gambler, I would really take more longs here on the euro pound. But I am not a gambler, so if I get stopped out of break even, that's fine. Which I think I am. All right, the Bank of England's Monetary Policy Committee sets monetary policy to meet the what 2% inflation target. Blah blah blah. 7.2 to increase bank rate by this is the thing. They increased the rate by zero. I mean by 25 basis points, and it was expected that they were going to increase. Um, I don't know. I thought that I read somewhere that it was expected that they were going to increase rates by 0.5% or 50 basis points. But no, two members prefer to maintain bank rate at 4%. Yeah. All right, let's have a look. Extend energy. I'm going to send this to, to all the groups. It doesn't look that good. All right, so let's have a look on this. Buy. I mean, it was a good. I mean, it was a good decision to close that short in silver, right? I mean, the pound is rallying. Kind of, yeah, the pound is kind of rallying at the moment. Very possibly I'm going to get stopped out or break even on my pound shorts on this news release. But you know what? You never know. So let's wait and see. Let's have a look at the FTSE. Absolutely nothing. Absolutely no reaction on the FTSE. Wow. Yeah. Stopped out or break even. No. Not yet. I mean, if I don't get stopped out of break even and price rallies here, which would mean that the pound um, crashes, That's this is luck. Let's have a look at some other pound markets. Yeah, and this is the thing. There's absolutely nothing, nothing, nothing. There's no setup. I mean, this is very, 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 very sketchy price action on this release. I haven't read. I mean, I haven't read the entire monetary policy, minutes. Um, I just heard on the squawk that there was oh, there was an increase or a hike in yeah, stopped out. I break even, which is fine. Silver, awesome. Gold, no, this is silver. So let's have a look at some other markets. Actually, tradable markets. Actually, tradable markets. So after yesterday's, I mean, this was I didn't trade yesterday's FOMC day. But if you were to trade, if you are ever going to trade, a central bank rate decision, um, you should always wait for the press conference because that's when you get the real, bias. So yesterday, and I didn't even watch it, but yesterday, Powell, Jerome Powell, was quite dovish on his comments. That's why equities crashed after the release of the data. Here's where the data was released, right? Boom. Um, maybe, or maybe here. But after the press conference is where the clean move happened. So, talking about that, oh, this big bearish move broke entirely with the structure in this market. So really, I'm looking for shorts now, but I have no sell. I have no setup. Yeah, it was a good idea to close my shorts in silver. Pound, pound, pound. GBP. Yeah, you know, um, 35 pips. That's not bad. Oh boy, oh boy, oh boy, oh boy. Hold on. Uh, no, I don't like it. Well, the pound is rallying at the moment, or is this a US dollar driven move? It is a US dollar driven move. So, have a look at this. This is the DXY, the US dollar currency index.
10 minutes away now to the bottom of the hour. We have a few US data points set for release, starting with the weekly US initial jobless claims with 197,000 expected for the week,
All right, so
again from
we
the prior
have
of
this is the US
192,000.
dollar
Reuters with a
currency
range of
index,
190,000 to
right?
210,000.
So,
For continued jobless claims, 1.684 million
um,
expected versus the prior of
yeah,
1.684,
I
a
mean,
range again
let's
of
look for
1.65
shorts
million
on
to
the US dollar.
1.695 million expected. Next up, we have the fourth quarter current account
So
brief
the
for
US
the
dollar
US,
is
a
crashing
deficit of
at the moment. This
$213.2
is
billion
why the
dollars expected
pound
versus a prior deficit of
is moving
217.1
higher.
billion,
This is
again a range seen
not
of a
a,
deficit of 250
pounder
billion to
move.
a
This is
deficit
a
of
US dollar
106.0
driven move.
billion.
So
Finally, from the US,
let's
the
look for
National
some
Activity Index
actual
for February from the
US
Chicago Fed
dollar
had a zero point 0.1
shorts.
reading expected versus a prior zero point
Um,
0.23.
no. Oh, no. Can see US 30. Now the Dow, if I have time. Is there a short chance on the Dow? I don't know. I don't trade the Dow, but let's have a look. Right, so let's do the analysis on the Dow. This is the thing. I mean, yesterday was a very, very, very volatile afternoon for U.S. equities, mate. So here's the thing, right? Um, where where in the fuck are you going to look for shorts, right? Just have a look at this, right? This is yesterday's. Well, hold on. Yeah, I mean this yesterday's New York range. I don't know what it is. I don't know why it's flagged as Asian session range. It doesn't matter. This is yesterday's range, right? Afternoon New York session, right? So from the highs to the lows, we're talking about a 2.34% range. And all of this today to me is just ranging, right? So let's have a look. Let's go to a 10-minute chart, right? And let's look for traps. My opinion, this is the first trap. That'll be my encounter, right? Back to the 3-minute chart. Yep, same thing, key level. So, if this is the trap, listen, I really, really. All right, so, okay, hold on. I know what I'm going to do. So, this is the 1-minute chart. Let's start by spotting, the protected high, which is this one right here. So, here's the protected high. Should price break with this high, shorts are no longer in play. Now, all of this is weak players in the market. I think a raccoon. Yeah, weak players in the market. Um, uh, possibly here is where I would want to go short. Let's see how far from current prices we are. It's super far, super far. But just have a look at this, right? This is, the London Session highs, and this is just liquidity, right? This is just liquidity. I mean, if we zoom in on the time frames, you can see that this is just deep, not deep buyers, short sellers or short traders, just going short at the retest of the previous broken lows, And for me, that is liquidity being formed, right? This is weak as players in the market. So patiently, I would in fact wait for these weak players to get fucked, utterly fucked. But where I would want to go short on the Dow, hold on. Yeah, most definitely here. So the first inefficiency in the market that I see is this one, right? Here's the first inefficiency in the market. All of these inefficiencies are really filled. Uh, Here we might have another trap in the sense that, all right, so hold on, let me just delete this. In the sense that this is another low, right? So um, these weak players in the market are going short, right? Trying to get in on yesterday's move, right? So their stop losses are going to be haunted. That is what liquidity is, right? And then, and I'm telling you this uh, because of how much I've seen this exact same, uh, you know, um, price action. Very possibly, what we're going to see is this
3 minutes
high
ago now to
getting
release of the weekly US initial
getting
jobless claims. Again,
swept, right?
197,000
And
expected, with
here
continuing
again,
1.69 million expected. So
short
the US current
sellers
account
or
balance for the fourth
short
quarter, a deficit of
short
$213.7
players
billion
in the
dollars
market
expected. Finally,
trying
from
to
the
get
Chicago Fed, the
short
National Activity
at the
Index, a reading of zero point
next
0.1 expected.
previous broken lows, which will create again more liquidity. So the actual level to go short on a Dow, remember, I don't trade a Dow. I see it now. I see it. Here is where I would, in fact, go short. Yeah, right there. With my stop losses above this structure high. So around here, kind of a wide stop loss. Let's have a look at the 50-minute chart. Boom. Here, these lows would be the ones that I would target for a 5.44R. But again, I don't trade it down. So take everything that I just said with a grain of salt, mate. And again, same thing with with the Nasdaq and the S&P 500. Kind of a sketchy market to trade today, in my opinion.
Some banking news here as Credit Suisse is agreeing to buy back $571.4 million worth of their
Jobless
2023
claims coming
25
up,
notes.
unemployment claims. Yeah.
1 minute ago now.
1 minute. Yeah, it was a good decision to close those shorts on silver.
10 seconds. 191,000 for initial jobless claims while continuing at 1.694 million. Current account to deficit of $206.8 billion, while the National Activity Index at a minus
194,000 you
0.19.
said,
To
right?
repeat, the weekly US initial jobless claims 191,000, below the expected 197,000 as well, dropping below the prior weeks. Continued claims at 1.694 million, a prior vision of 1.68 million. That was below the prior of 1.684 million. Current account, a deficit of $206.8 billion worth, with a prior vision deficit of $219.0 billion. As well, we look to US National Activity Index, a reading of minus 0.19 versus prior 0.23.
191K, right? All right, so everything points out at possible US dollar shorts, and this is the US dollar currency index. And in my opinion, the USD currency index is setting up very nicely for shorts, right? Waiting for a rally, actually. Um, I don't know. I don't trade the US dollar currency index, right? But I mean, it's quite in the quite extremes, right? Um, it's really under pressure. The U.S. dollar is really under pressure. So, you know, placing limit orders to short the U.S. dollar, which would mean that I would look for perhaps, to place buy limits on the USD, sell limits on the US dollar, Mexican peso, etc., seems a little risky. Um, More so because of this, right? Just have a look at this. These highs are super. They have. We have been trading for a. Well, I was going to say an entire week because I thought I was looking at the hourly chart, but this is the 5 minute chart. So the past 1, 2, 3 sessions have topped at around 102.45. So we have the weekend gap still left on field. This is a big ass inefficiency. And the thing is this, right? Inefficiencies in the market very likely are always going to get filled. The thing is that you don't know if they're going to get filled right now or in 2 months. Um, so that's why focusing on short-term inefficiencies to create an entry model is better than focusing or than looking for gaps, weekend gaps, long term. When I say long term, you know, talking about the 15 to 1 hour
And
chart.
comments from ECB's Muller coming through, wouldn't worry about a financial crisis in Europe.
Revision. Once, that's fine. So, I have absolutely no trades, no trade setups. It's amazing. The pound, right? time was a sketchy one today. So have a look at this, right? Have a look at this. I got stopped out because my entry was here or here. I don't know. But um, I mean, if you guys or for all of you that were with me during the data release, I clicked buy around this level, but the slippage was so fucking high, so wide, so wide. So if I had been filled where I wanted to get filled around this level, um, I would still be in that trade in this short on the pound on a very nice profit because my stop losses on this trade, hold on, were here, 1 hour chart, were here. So about a 20 pip stop loss, but fucking slippage, right? Right. Let's see if we can actually have or find an actionable position or an actionable setup. If spreads in silver were not this wide, I'm going to show you how wide these spreads are. Have a look at this. This is super wide. If spreads in this market were not this wide, I would short silver again right now, but I can't. I mean, these spreads are so wide, which would mean that my stop losses would be just way too wide. God damn. All right, we might get. I mean, we might have something in gold. Uh huh. Let's have a look. So here's here's what I'm thinking, and I am going to place this order. I don't know if I'm going to get triggered this move super strong, but you know after we're talking about, yeah, after, hold on, not even after yesterday's price action, but if we look at the 10-minute chart, I mean, this market has been extremely bullish, right, for about 2 weeks worth of price action. But right now, shorts look phenomenal, and I'm going to place a sell limit here. Let me show you. Let me show you what I'm looking at, right? So, basically, I'm looking at this. This is the last sweep of the highs. Very, very narrow sweep of the highs, right? If this is the last sweep of the highs, we're talking about the next low to be, what triggers the change in the character or the bias in the market, right? So, Let's have a look at what the order block that triggered this. Looking at the 1 minute chart, actually I'm gonna go to a 3 minute chart. So here it is, and right here. All right, I'm gonna use this. This is the order block that I would love to trade. More so because this just buy side liquidity that has been created, and I would most definitely target this lows. I'm going to place this sell limit in gold. 12R. It is 12R, but yeah, this looks phenomenal. All right, guys. So, what do you think about this? I'm going to place it. This is gold on a 5 minute chart. All right. So hold on. I need to go here. Navigator and my risk calculator. I'm sorry. Kind of tired today. Risking 0.20% on this trade, right above this liquidity. I mean, again, gold is crashing, right? I just want to get involved in the move, but I'm never going to, to short this or to chase the market, right? Let's have a look at where my targets would actually be. 1952, 10R. Yep, exactly 10R. So this is my trade. I like it. I do want to get feel on this. Should should price. Yep. Yeah, it's looking good. This setup is looking good. So I'm gonna send this to my VIPs. Hold on. I'm gonna round things up to. I'm dyslexic, so I need to copy paste everything. It's gold, right? Stop loss here. see if we can get film on this for a 10R. Risk is a 0.22%. Well, what do you know? Also, I mean, this was so fucking stupid. I mean, this slippage was so crazy. But I really don't like to place pending orders prior to big data dumps. I just don't do that. I just listen to the data that is being dumped on my squawk, and then I react to it. Here, I listen to what the Bank of England did. So I shorted the pound by going long on the euro pound, but the slippage was so wide that I had no choice, mates. But well, in hindsight, I could have placed my stop losses or moved my stop losses here. I don't know. That would have meant that I would be, you know what? I don't care. It is fine. So, any questions, guys? If you don't have any questions, I am going to log off, and I'm going to keep this trade or this pending order live. Um, just a last look at what we can find here. Yeah, I mean, today's really sketchy for U.S. equities in the sense that I don't have a clean setup, vis-a-vis my entry model. So I don't think I'm going to be trading, the U.S. Open. No, I don't think. Yeah. So I was looking also at the pound yen. I mean, I murdered the pound yen yesterday. I'm gonna show you. Bum, 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 bum. Um, Historic properties. Alright, so this is what I did yesterday and the day before on the pound yen. Two positions. So I bought here 2 days ago, took one and a half hour here, and let the rest of it ride. Then I took a loss, a 0.22% loss here, but I got in, I placed another buy limit here. Just have a look at how this is a sniper entry. I was trading CPI inflation data out of the UK. So I took profits here. Took more profits on the day before's longs here, and I closed everything here at 163 just before, the big dump. So having said that, you know, after reaching 163, this market just crashed, right? So shorts are in play, but where are we going to find those shorts? That is the question, my friends. And what I was looking at is this, right? Here's the trumpety trap, in my opinion, right? I don't trade, and in my opinion, trading, the retest of the previous broken lows or the previous broken highs is just burning money. This is not profitable in the long term. Not only risk to reward ratio wise, but also, risk wise. There's a ton of things why this, why trading, the pullback towards the previous broken highs or the previous broken lows don't work. So I was waiting for this, I'm still waiting for this, right? So where I am looking to place a trade is right here. Here's that order block. Here it is, that order block. What I think about this is that we still have this highs. This is just liquidity, guys. It's just liquidity. Rumba. Rumba. So I would. I don't know if I'm going to do it. I'm still undecided about it. So here is what my short setup on the pound yen would look like. Uh-huh. And targets, of course, this low. This yields about it's not the best R actually. Uh, two, three. I wouldn't take this just because of the risk to reward ratio. I don't take anything below 3R. And if I were a rookie trader, what I would do is this. I would just move my target to this low for a 5.42R, which would mean that I would be able to take this short should I get triggered on it. But moving my target to these lows is just, yeah, it's just accommodating this setup towards my personal trading rules, and that's something that you don't do. Yep. Yeah, I could go here, but I really don't want to get triggered. So if I go here, hold on. If I go here, still a 3R. It doesn't look that bad. Possibly, I don't know if I'm going to take it. Let's have a look at gold. Um, yeah, I'm gonna wait for this. I'm gonna wait for this. I don't know if I'm going to get triggered. On the pound yen side, possibly we'll be placing those sell limits that I just showed you. Um, and yeah, let's have a look at last look at the pound. Super sketch. Yeah, now the pound is super bearish, which means that the euro yen just rallied heavily. You know, um, but what can you do? The only thing that I can do here is just look in hindsight. What should have I done better on managing my position, right? Um, because of slippage, I got triggered here, I think. Yeah, I got triggered here because of slippage, right here. When I wanted to get triggered here, right? My stop losses were quite wide on this buy because it was a news trade, right? So my stop losses were below this 1 hour low. Wide stop losses, right? But the reason that I calculated my stop losses was to calculate my risk. So in hindsight, uh, you know, um, I should have not moved my stop losses to break even, but below the spike low. This is the news spike low, right? This is the fake E or the fake move before the actual move. Um, but yeah, in hindsight, I should have placed my stop losses here, which would have mean that. With this open trade, right, whilst price was trading here to my entry level with stop losses below the week low of the news candle, I think my risk would have been around 0.0 0.09 or 0.08, which is pretty good risk for a news driven trade, right? So in hindsight, I should have placed my stop loss below the news candle week low, right? And now I would have, uh, you know, um, I would have taken, 75% off at 30 pips or so. Because this is a news driven, it was a news driven trade, I wasn't looking to run it. But you know what? Yeah, I hope some of you did just that, but I didn't. Please, where do you listen to your audio news? Here, it's called Live Squawk Made. I think, I don't remember how much I pay, but I think it's $150 a month. I mean, I have an automated payment for this. But I mean, if you're serious about trading currencies and more so trading, you know, data dumps and big news releases, you need a squawk. And if you do buy into this service, let me give you some pointers, right? Um, I don't know if you are from the UK or not, but I'm not. So the first few times that you're going to listen to these motherfuckers, spit out the numbers in their with their English, boys, you're not going to understand what they're saying. Takes some time to get used to it. Yeah,
Just looking to the
sure.
FX base now and the pound now racing
Of
as
course,
against
mate.
Aussie
I
dollars.
can
Canadian is trading
always
on
put
flat
on
on
my
deck.
squawk
Currently
here.
trading
That's
around
not a problem.
122.76.
Yeah. You know, actually, here's a link. Actually, whenever we have, or whenever there's big news releases, um, hold on. Whenever there's big news releases or whatever, kind of important data dumps, I'll always, put on my squawk so we can trade live the news. So right now, I'm not looking at anything at all, mates. I broke even today. Uh, I think that I made about $4. uh, I'm not kidding. and I'm really not looking to trade anything. This is the only actually good setup that I'm looking for.
For the banking
The
news, there's comments from
Hold
Charles
on,
Schwab knowing it could ride out a run on deposits.
this ball short, and U.S. equities wise, U.S. equities wise. I'm sorry, U.S. equities wise, I'm really not looking at anything. I mean, after yesterday's move, um, I don't have a clean setup. And remember that I only trade one one entry model. I only trade one entry model, right? And because of this very volatile move yesterday, I don't have a clean setup with my entry model, so I'm not going to trade the U.S. Open. Today was a break-even day for me. Um, I started the day down about 0.7%. Um, made it back and ended up profiting about $5. But you know what? That's just the way it goes sometimes, right? That's just the way it goes sometimes. Um, you know, um, Break even is a profitable day in my mind, right? So I'm not gonna push it. I'm tired, and like I told you, I don't see anything really, really, really good. U.S. equities wise, and whenever I trade the U.S. Open, I focus on the Nasdaq, right? And on the Nasdaq, let me show you, right? This is the Nasdaq, and on the Nasdaq, if you're an OG here on my show, you already know that what I trade is liquidity sweeps, right, and inefficiencies in the market. And because of this big ass move yesterday, it's quite hard to pinpoint, um, real zones or true zones. And because the way that I trade is that I sell into, or that I buy into weakness and I sell into strength with the limit orders, not being able to really pinpoint an exact zone with an entry level, a stop loss, etc. It's just not optimal and would be gambling. And if you want to gamble, yeah, we can play poker, and I will take all of your money because I am very good. But that is if you want to gamble. But this is not gambling. Even though it is a zero sum game, in the sense that you are taking money from people that is losing money whenever you make money. Um, the edge that you have or that you might have in the markets is really, 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 really tiny. But it is, big enough to be exploited in the sense that, for example, um, I don't have, I'm competing, against, uh, you know, uh, funds that manage billions of dollars. So my small accounts or the small assets under management that I can have or that I have absolutely no impact in the market, right? I am competing against, the fastest executions. I don't have the fastest executions. That's why I get so much slippage. I am competing against, funds traders that have uh, information or the necessary information way before I have it, right? So all of that is why most people lose money in the market. So what you need to do is think about that. Think about everything you are competing against, and putting a dot into it, right? And trying to just find your edge. And like I always tell you, your edge is fucking simple math. It's simple math and probabilities, simple probabilities. There's nothing else that will make you money consistently in the long term than having a data based decision making process, right? I only trade one entry model at the London Open and at the New York Open and I only traded in three or four markets because I have back tested the shit out of it and I have forward tested it with real money. And I have a big enough sample size of those historic trades that I know the probabilities of success of those setups on those specific markets because the probability of success of my entry model on the FTSE, for example, it's not going to be the same. The, the probability of success of the same entry model, the same setup on the DAX or on the Nikkei or on the Dow, right? So if I haven't back tested enough. A market, I don't trade it. And there's markets that I don't trade because I have back tested them and I know that I'm not going to be profitable trading them. So, the game here, guys, is making money. So, fuck your ego, fuck everything, just making money consistently is easy. No, I'm sorry, it's simple. It's not easy, uh, but it's simple. It's about doing the same fucking thing day after day after day after days. So, the reason that I'm telling you this is because if you are the kind of trader, right, that opens their charts, right, and for example, goes here on the USD, right, goes here and draws line, you draw lines, you look for support levels, etc., etc., and you start creating a bias in your mind based on what you are drawing on your chart, on what you are doing at that moment, and taking every single one of the setups that you look at, well, you are a fucking rookie, right? So what you need to do is this. For example, I need to clean this shit up because I trade. I'm gonna be honest with you. I trade four markets, right? I trade the pound yen. I trade gold, silver. I trade the DAX. I'm sorry, the Nasdaq and the FTSE, and that's fucking it. That's all I trade. You know, uh, the only reason that I have all these markets here is because um, yeah, because sometimes you ask me to look at them. But the thing is that this is what I do. For example, right? I have this. I don't use indicators for this entry model, even though this is an indicator. But this is just an indicator that shows me the range on each and every single one of the sessions, right? So what I do is, I trade inefficiencies and liquidity sweeps at the London Open and at the New York Open. So what I do is what I look for is, it's super specific. It's super specific. I'm gonna show you actually. Um, yeah, I don't remember when was the last. Wait, silver. Silver is a good example. I think. Right, my short in silver. No, silver is not a good example. All right. So okay. So this right. My sell limits in gold, the liquidity ship. Right. So the New York session is about to open in 20 minutes. So what I look for is, what is not a good example either because this I'm sorry, this is a reversal trade, so it's not a good, you know, example. But you know what is a good example? This is a good example. So, this was my first buy on the pound yen, right? And this is what I look for, guys. I look for the trend in the market. Of course, the trend is bullish. So, the first thing that I look for is the trend, right? The trend was bullish here. Second thing that I look for is the impulsive moves, right? Here we had the impulsive move, which means that this choppy fucking mess is the pullback. Now, after spotting that, I look for weak players in the market, right? The first thing that I look for is traps, right? Like I always tell you, uh, here's a great fucking example, right? You know, traders that try to go long at the retest of the previous broken highs, right, are going to get utterly fucked. Why? Because one, where are you going to put your stop losses? Your stop losses, of course, on a deep buy. I mean, if you're a rookie and you deep buy here, your stop losses are going to be placed here. Then because you are such a fucking rookie, that you cannot see the actual structure in the market. You cannot see, the inefficiencies in the market or the liquidity in the market, which means that you turn into the liquidity that we all hunt to trade. So I look for these rookie players, right? These weak players in the market. First thing. Second thing, of course, I think this is the third thing. Fourth thing that I look for is where the fuck am I going to buy, right? So I look at, the structure in the previous impulsive move, right? So we have that break of the structure here, right? But we still have untapped liquidity here. And the actual break, I mean, the where the character in the market change from the pullback to the impulsive move is on the break of these highs. So I'm going to get in here. I'm sorry. I'm going to use lines. I'm going to use this inefficiency in the market and I'm going to try to trade this order block and my stop losses of course are going to be up below the structure low. um, no, my stop losses were going to be below the structure low. So I put my buy limits here, right? Some people, I mean, most people are very afraid of using limit orders, and they should be because when you use limit orders, you are actually buying into strong weakness or selling into strong strength. So if you don't have a good entry model based on hard data with an enough big sample size, just keep trading stop orders. And yeah, targets at the structure high for about a 5R. I traded this. I took profits because I mean I have a specific way of how I manage my trades. Whenever my trade runs about 1.5 to 1.75 R, I take 1 hour off and I move my stop losses to break even. That's what I did here. And price continued. Then here, this was during the Asian session, and I wanted to get long again, mates. This market was strong, so I made a I took a long here. I buy limit again. I got stopped out. Yeah. So my buy limit was here, trading this imbalance, this order block, but I put my stop losses here, and they should have been here. So I got stopped out for about a 0.25% loss, but I was still running with 25% of yesterday's trade. But you know what? Because I am not results oriented in the sense that I don't focus on the outcome of the last trade, I know that I made a mistake, right? Everybody's a fucking hindsight hero. I know that I made a mistake. But I saw an opportunity again. So I put, same setup, liquidity being created here, imbalances and big ass order block here. Hold on. You know what? I'm going to use this because I can't draw straight lines here. And stop losses below this low. So, and this was, 10 minutes before inflation data out of the UK. Um, you might think that I front run that data dump, but I didn't. So I got triggered here. I got triggered here. And yeah, we run all positions towards 163. So this was my pound yen trade from a couple of days ago. And yeah, people always ask me, why do you close your trades and you don't let it run? I do let them run, right? I took profits here, here, and then here. So I let it run. But if I should have, I mean, just imagine that I didn't have, or that I was the kind of trader that whenever price moved in my direction very strongly like this, they just hold to their positions and they don't care about taking profits because what they're thinking about is that home run, right? Because of the small, the big risk to reward ratio that I get on my setups, my position sizing is quite big, vis-a-vis my equity. So if I were the kind of trader that just don't take profits, look at look at this. I would have, instead of making 1.5% on all of this, I would have lost 0.3% here and 0.25% here. And I would have been completely and utterly mad at myself. So I'm just telling you this because, you need to find yourself, right? Today I was talking with someone on my F1 strategy group, and they asked me why I risk so much, so little on my equity. My average risk is, my average risk is about 0.27% per trade. And the reason is because of this, right? Because I focus on my decision making process and I know myself, right? Everybody is different. Everybody's fucking different, right? So, and the data shows me because, I mean, you have to mine the fucking data There's absolutely no way that you're going to make money consistently in the long term if you don't journal your trades, if you don't backtest, and if you don't mine the shit out of that data. And the data shows me that whenever my risk is higher, I'm less profitable, and I know why because risking 0.25%, right? Just imagine on these two trades, I risked 0.25% and I made 1.5%, right? That is kind of an anomaly because the market just ran, right? But the idea here is to that you guys need to change that mindset and start looking at start focusing on your decision making process, not on the results, not on the money that you lose because most of you don't make money trading. And also look at everything, not only your trading, but look at everything in your life in percentages, right? Not in hard numbers, because the money that you see on your open P&L is not money. I mean, that's just numbers. That's just to keep score made. The only time that that is money is when you withdraw it to your bank account. So don't look at it at shit. That's my car payment, or that's my no. Fuck that. That is 0.7% profit on my equity. Because if you start, building that mindset, uh, where you're going to completely and utterly remove emotions out of your trading, and you're going to be able to do the same thing emotionless over and over and over every single day, and that is when you're going to start building a beautiful equity curve that you can then show people, investors, and then you can start managing money. Because let's face it, uh, most of you guys, I mean, you're going to get. I mean, if you can, if you can spare $10,000, that's a good thing. But I don't think you can, right? And when I say that you can spare $10,000, I mean putting 10K on a trading account and just trading it without thinking that you're going to make money on those $10,000 to pay for your fucking bills. No, I mean, none of you can do that. So, um, investors, if you look in social media, guys, 99% of these fucking gurus, what they show you is fake, fake stacks of money, rented Ferraris, fake Patek Philippe's, etc., etc. Because that is what broke people look for. Rich people, really, really rich people, they don't care about that. What they care about is placing their money where they can get a better, compounding with very low risk. So if you can show a fucking millionaire that you can consistently make 4% per month with a 1% overall drawdown, he's going to vomit millions of dollars onto you, because 4% per month compounded over 1 year is beating the S&P 500, and that is what you need to focus on. Flipping accounts, that's for broke people. Just change your fucking mindset if that is what you are looking at. All right, ABOB, gold. Yep. Let's see. Let's see if we can get triggered. I'm gonna get some ice for my water bottle. I'll be right back, guys. Everyone's a hindsight hero quote of the year. Yeah, I mean, isn't everybody a fucking hindsight hero? All right, let's wait for this goal. I'll be right back. I'm just gonna get some ice. Yo. All right. Um, but the Euro GBP went bullish just after you exited. Yeah, I know. But I talked about, why. All right, gold. Let's see if we can get triggered on this. Did I send this to my VIPs? Yeah, I did. It's a 10R. I'm risking, let's say, 0.25% or so. Uh huh. Hey, the market is about to open in 2 minutes, so I'm gonna go get some ice, for my water, and yeah, let's look at the open. Maybe we can get that right in here. Yeah, this is looking phenomenal. I'll be right back, guys. Don't go anywhere. Alexa, apaga la luz de la cocina. Fucking Alexa. All right, I'm back. The market is 30 seconds. Gold, gold. Everybody wants to trade fucking gold. All right. Boom. The market just opened. Uh huh. Let's see. Should we? No, we shouldn't. Oh boy. All right. Let's have a look at U.S. equities. Oh boy. The S&P 500 rallying hard. The Dow rallying hard. Gold dipping hard. Well, not dipping hard. There you go. Have a look at this S&P 500, guys. So, this is the thing. I mean, there's absolutely no setup after this big drop. I mean, I can't find it. I can't find a setup, so I'm not trading it. Gold, on the other hand, is quite a good setup. But I'm not getting involved unless these highs are taken, right? So let's have a look at gold. I'm gonna show you what I'm looking at. I think I already told you, right? Here. Yep, here. This is my setups. Have a look at silver. Silver is super choppy. Now copper setting up nicely. Let me see. No, no, that's this is the setup. Yeah, this is the setup. And this, have a look at RDXY setting up again for longs on a day trading basis. If the DXY, I mean, just have a look at this. I mean, you need to look at how actual currencies are trading, right? I only trade the US dollar and the Japanese yen. So, In this possible gold short, what I'm looking for is possible US dollar rally, right? So where would you buy into, you know, a USD? First of all, have a look at this. The normal session swept with the Asian session lows. Um, there's a ton of liquidity being built up here. I don't know. Maybe I'm not going to get it. Let's wait. Let's wait. Now let's watch gold. Let's watch gold. Yeah. So what do you guys think about this setup in gold? Let's just wait. I mean, let's be patient. In my opinion, this bearish move at the open, again, just weak players. There you go. The risk to reward ratio in this gold setup is just amazing. Let's see. These highs are really going to be taken. Weak players, maybe not. Would you guys consider going short here in gold? I wouldn't. taken out. No courtesy, you. I don't know what you mean by that, mate. Molly. I don't know what you mean by that. Come on. You see, those shorts, those weak sellers at the open just got taken out. Hola, Ana. Viva.
Buenos días.
Hola, ¿qué tal?
Bien, bien, gracias a Dios.
No, I won't enter the gold trade just like you. Yeah, that's right. Remember, you have to do what courtesy you are advised. Oh, I understand now. Let's see, let's see. Uh, I am live every single day. Yes, Molly, I am live every single day. Well, you know what? That's why I do this. All right. So when you're rallying, let's have a look at Nasdaq and the S&P 500. He is blessing for newbies. Learned a lot from your setups, mate. Thank you for the kind words. It makes all the fucking difference. Right. If gold takes out these lows, very possibly um, I'll be missing these shorts. Let's wait. So that's a good that's a good question. Um, I never risk more than 0.25% on any of my trades. You know, to me, risking 1% is I mean, just over risking. Just imagine this. Because I mean, if you trade for a living, right? Um, you know, you're going to encounter times that you're going to be in a drawdown in the sense that you're going to lose several trades in a row. That is part of the game. And if you risk 1% per trade, and if you lose five trades in a row, you're going to be down 7% or so. So it's just not optimal. I mean, the idea here, mate, is to make money long term, right? And to have a very small drawdown. Come on. That's right. Risk management. All right, let's get trigger on this gold short. ABOB 0.20 ABOB says 0.25% not give you good profit. And that, my friend, is a broke ass mindset. You're thinking, I mean, I don't know, I mean, you're thinking, I mean, your mindset is the mindset of a broke person, right? When you get to the place that you don't see how much money 0.25% can yield, but you see that by risking 0.25% on a higher than a 1 to 3 risk to reward ratio setup with a higher than a 72% probability of success yields and compounds, that's when you're going to learn, not to have that broke ass mindset. Don't think like a broke dude. Even if you're broke, I don't know if you're broke, right? But don't think like a broke dude, right? Because what you just told me is that what you just told me is basically that you're trading a very small account and risking 0.25% on your trades is not going to make you money on your small account, right? This is a small account, right? You're not going to make a living out of trading long term with a less than a quarter of $1 million But the thing is that you need to focus on risk. Triggered goal short. You need to you need to focus on risk management. You need to focus on creating an amazing equity curve, and then get a shit ton of assets under management. What is the highest percentage you have gained on funded account? Listen, um, the highest the highest percentage uh, that I've done is about 142% year over year. That was about 3 years ago, risking 0.5%. So, with a very, very small drawdown. All right. So I'm trigger goal short. Let's see what this market does. Maybe I'm going to move my stop losses a little bit higher. And this is why also this is also why I risk 0.25%, because I by risking this little I am able to manage my risk on open trades. For example, right now I'm going to my stop losses higher right here. So in this trade, I'm risking a little bit more. Uh huh. So if gold takes these highs, my trade idea is no longer valid. But I am, however, going to um, hmm, update my VIPs. All right, so structure high. Stop losses. My stop losses were a little bit too tight. Um, but I'm good. So right now, by moving my stop losses higher, my risk is 0.4%. Um, I think I should move them to 1987.10. So right now I'm risking 0.5%. This move is very strong. This move is very, very strong. But setup is still valid. All right, so I think I'm good. No, mate. Listen, AB. Gold trigger before you update the VAP channel. Um, hold on, hold on, because I'm trading right now. I am going to close half after this candle closes. Nope. Yeah. Closing half. Closing half here. Closing half if gold takes this highs. So ABOB, hold on. Closing half at a loss, small loss, and letting the rest of it ride. It's a hit or miss right now. So ABOB, uh, yeah, you know how I trade. You're in my show every day, and listen, guy. Yeah, I'm more focused on trading my account and doing my thing, right? And I do my thing, and then I update the VAP group, right? So, for example, right now I closed half of my position at a loss, right, managing my risk, and I didn't update the VAP group, right, because I didn't have the time, mate. I didn't have the time. So, these markets move super, super fast. So, on the remaining position, my risk is, 0.3%, 0.25%. Yeah, this looks super strong. but it's all about managing risk. Wow, super strong. S&P 500. ABOB, I open another position. Um, that is entirely up to you. Let's have a look at THY. Yeah, this is good. This is good. All right, let's wait for this trade to develop. I'm gonna stay here, not going anywhere. I'm really thinking about, closing it at a full loss, but no. I mean, just look at silver. Let's wait. Let's wait. Let's wait. very strong. I really don't like this, but I am, um, my stop losses are at a level that utterly, you know, I'm sorry, I was looking at my own screen. So my stop losses are a level that utterly invalidate, the short thesis. All right, let's wait. I mean, I'm gonna wait here. Molly, the risk calculator. Hold on. Yeah, hold on. I'm thinking of closing this. Just give me a second. So this, go here, go here. Riskcalculator.app. It's $10 a month. This is good. This is good. How much did I lose? 67. My new stop loss on gold is 1987.10, but I think I'm going to close it um, unless Yeah, this is super bullish. No, I'm actually going to let it ride. I mean, die or ride. I already mitigated my risk by closing half for a 0.1, 0.12% loss. So I'm good. I'm good with the open risk on this position. So I'm gonna let it ride. What I don't like about it is this. All right. Yeah. Yeah, I'm closing my gold shorts here. Closing them. Closing for a very small loss. Possibly no. I'm really closing it. All right. The reason that I closed my gold longs here is I'm gonna show you actually. It's because of this. It's because of this. Now, very possibly, very possibly, how much, how much did I lose? $87. So that's 0.18%. That's nothing. But this is the thing, right? My short idea in gold was valid, but because price, broke with these highs, very possibly we are going to get a pullback. But this market is super bullish right now, and I move my stop losses higher right here about these highs, but this is just liquidity, guys. So if I were to hold the rest of my position, very possibly I was going to get stopped out. So I closed at a zero point. What was it? Nothing. 0.18% loss. 0.18% loss. Mitigating my risk, and this is the thing, guys. This is the thing, right? Um, Whenever your thesis, one, one, the reason that I take so small risks is because I can, manage my risk whilst the trade is running. And also, you need to have a plan on what to do if price breaks with your levels and mitigate risk. So instead of leaving my stop losses at the level that I put them, right, which was about a 0.6% would have been or is going to be a 0.6% loss. I just lost um, 0.18%, less than 0.2%. So, yeah, I mean, it's all about mitigating your risk. Now, gold shorts are no longer in play, mate. Be careful. This market is very, very bullish. Yeah, Molly, I told you. I told you. Here it is. Go here to riskcalculator.app. I mean, I don't get paid to promote this, but it's $10 a month, and in my opinion, it's the best. Risk calculator for MT4 or MT5. Just have a look at what gold is doing at the moment, right? I'm gonna show you here. Yeah, all the 1 minute chart. I mean, this market is super strong, super, super, super strong. After taking out these highs, you know, um, shorts are no longer in play, and finishing up with a 0.17% loss to me is a win. Dude, I'm dyslexic, so I am going to do typos whenever short. That's fine, mate. Whenever I send messages on the VIP group, I mean, you're just going to have to live with it. I can't help it. I mean, you've looked at what I do, right? I'm actually trading live, managing my risk, mitigating my risk, closing half of my positions, checking all the market, etc. So if I make a mistake, like today, right now, that I said I closed my longs in gold for around break even, you understand that I'm talking about my shorts in gold. So, yeah. Right, so this market is it's super strong. Um, there's still the possibility that it's going to dip. And This is the US dollar currency index, right? Bimba. Bimba. So this is the US dollar currency index, right? Right now, um, uh, US dollar longs still are in play, but in my opinion, price needs to dip towards the 102.05 level, which would mean that I would have, I, I will, I would have gotten stopped out at a full loss before the actual move. So, to me, today is a win, guys. Today is a win. You know, it's all about, it's all about preserving your equity, right? I'm still up 2% on this account, and yeah, one thing that I don't do is just hold on to trades because um, of what I saw when I placed the orders, right? That means to have, not to have a bias, but to be blindsided, right, by your analysis. So this is an ever-evolving game, and you saw what I did, right? I got triggered, and then I decided to close half of my position at a loss. When price broke with the highs, I moved my stop losses a little bit higher, right above the real, structure high. But then, looking at the DXY and looking how gold reacted to the lows, more so how gold reacted when I closed that position, right? To the Asian session highs, my short position had no edge. So instead of, getting filled on my short and just letting price either hit my stop loss or right in my direction, I manage my risk and I mitigate my risk. And instead of losing 0.6%, right, which is to me a big loss, I just lost 0.12, or I don't remember, 0.18%, right? Um, and yeah, because of it, I'm still on a, I think, on a, no, I don't think I'm on a profitable day. But if I'm not breaking even today, I think I lost 0.1%. So it's all about mitigating your risk. Don't get married or don't get in love with a trade. And there is the possibility that gold is going to go lower, right? But the way that I manage my trade and the way that I mitigate my risk in this position to me is optimal because right now shorts have absolutely no edge in this market, right? So I'm going to log off. I've been live for 2 hours and a half. Let's look at U.S. equities. I'm not trading anymore today, guys. Yeah, I'm not trading anymore today. 51K. Yeah, I lost. I think that I lost $30 today trading, which is which is okay. Basically, break even. Not every day is going to be a winning day. Not every day is going to be a um, a slam dunk like yesterday on my pound yen trades. But coming out of the battle without a scar to me is a fucking win. So focus, focus on mitigating your risk. Focus. Really, really understand where your trade loses its edge. Um, and don't be afraid of taking half of your trade off at a small loss to give you room to to ride on a deeper drawdown on your trade, right? It's all about, managing an active trade is what makes you a trader, right? Managing an active trade, managing losses like I did right now is what makes you profitable long term. So heads up to that. I'll see you guys tomorrow. Cheers.